Hey everyone, well, thank you for joining us. So today we're going to talk about why are loans delaying your closings? My name is Cameron Ripley. I'm with Purpose Home Lending. My NMLS number is 2314695. I'm licensed in a lot of different states, but I'm here to just talk with you in your specific state because I used to be a real estate agent, and we have many agents or former real estate agents in our company. And we know what you go through. And I know that a lot of times, a lot of you veterans or even brand new people who have closed deals pretty quickly have had those moments where you're representing the seller or the buyer, and things just get delayed last minute. And you're really unclear why it's happening because no one's really communicating. And unfortunately, when it comes to the sales industry, many people tend to be, how do I put it in a nice way? Kind of white liars a little bit. But they were taught, to be completely fair, when I first got my mortgage license and I joined different companies, they taught us to one way or a terrible way. And unfortunately, I do think there's a lot of people in the industry that although they mean well, they were taught some bad things that do affect your closing. But one of the worst things is that they were taught just don't take the agent calls until you have good news. I had literally heard a guy from 30 years of experience in the mortgage industry tell me that when I was a listing agent, that he said, I don't have any good news, so I didn't want to have to call you. And I said, really? Well, that's why we're going to be taking your client to court, because you're really screwing us up here. And if you would just communicate what's going on, that'd be greatly appreciated. And he definitely lied and told me a bunch of things that the problem with lying and a problem with what he told me, because it was a lie, is it's easy to fact check and it comes up with the truth. And it's easier to just tell the truth. So if you find a loan officer who's telling you the truth, I would respect that. Now in this presentation, I'm going to cover things where you can call them out a little bit and say, well, from my experience and what I've been taught is you should have known that ahead of time. Or from my experience and what I was taught, that may have been something that you would not know ahead of time. And it's not something that's your fault, but thank you for bringing it up to me. So to really get into it, what are the main things that are their fault? What are pre-approvals? So a lot of times people will say, how long does a pre-approval last? It can last 5 years, to be honest. It could last 1 minute, because I could give someone a pre-approval and they can go get a brand new car and it screws up or quit their job, which has happened to me after I gave the pre-approval and we got into contract. And there goes everything, So just keep in mind that a pre-approval is a pre-approval. Now, a pre-approval, if you actually read a lot of these pre-approval letters, it does say that I have verified some of their documents, reviewed their credit, possibly. Not all of the pre-approval letters will say that, but reviewed their income, reviewed their assets, and reviewed their liabilities, and can certify that they're pre-approved. Now, things do come up that are regulation-wise or weird one-off things that it's almost impossible to know. Imagine your guys' contract changing, without anyone knowing that it changed, but changing multiple times in a year, if not multiple times in a month. That's kind of what happens with our guidelines. And not to say that they're deal breaker changes, but they can really affect our turn times and closing times. The problem that a lot of people have is they start to get a little lazy, or their company taught them to not ask for certain documents because they don't want to overwhelm the client initially. And the problem with that is when your client gets into contract, now you as the agent are scheduling home inspection, pest inspection, and you have all roof inspection, whatever else it might be. You have all these inspectors telling them everything that's wrong with the house. Now I'm sending them loan docs where I'm disclosing to them usually an overestimate on closing costs, because I kind of have to guess a lot of other people's fees. But I'm disclosing a lot of things that are not exactly the positive, exciting side of things. For me then to have to ask for a giant list of documents, it can be very overwhelming. And I'm talking from personal experience for any consumer, anyone buying a house. So a lot of people are taught not to ask that. And I think that's a terrible approach. not taught not to ask for a lot of documentation. When they get documentation, those that do ask, they don't really know what to look at. To be honest, I was not taught what to look at, what to even look for. That was the job for the processor. And the problem with that is the processor is there. They're basically like your guys' transaction coordinator. They are there to go and help collect additional documents that an underwriter may ask for. They're not there to save my loan. But unfortunately, with the refi boom, we just had too many people that became order takers, and they were good at the initial call, but then had to have the processor save everything else. So they're not good at knowing, if I pull up a bank statement, the first thing I'm looking at, they told me they work full time, and I'm going to look, it better say 40 hours a week. And then I'm going to do an average of how many weeks we've had in the year to date. So all the hours should add up to an average of 40 hours a week. And if it doesn't, we have an issue. If they took time off, fine. All they have to do is send me an email, or their employer send me an email saying, yeah, they took time off. It was paid, not paid. But what happens a lot is their income or their hours actually fluctuate, and it becomes variable income. Now I have to get additional pay stubs from previous years, and I have to do more of an average. And it becomes a huge issue, and it can delay a lot of things. You may find, if you've ever had a deal get delayed more than a month, my guess is they needed that extra month to have a 2-year history of variable income. And they're not going to tell you that. They're just going to not answer your call and just try to ask for forgiveness later. One of the biggest issues is things like big deposits on bank statements, because with money laundering laws, we have to be able to source that income. A big one is I switched employers. I'm whatever it might be. They're not asking the client ahead of time, and that's why the transaction is getting delayed. Because also, let's say I write I tell the agent we can close or I can have the loan contingency done in 14 days. But I haven't asked for a lot of documents that may take the borrower weeks to get, or a week to get. Well, that can become a big issue. We have a lot of older borrowers who don't have online banking. The loan officer should be aware of that from day one, because it's going to be really hard to get certain statements, because they have to call in or go to a local branch. If it's a credit card statement that we need, it's going to be a huge issue. So just so you're aware, that's probably the biggest issue why your deals are getting delayed, and why there's big hiccups. Or if you're representing the buyer, why their attitude totally changes is they're being asked for a lot of documents. They're seeing numbers that that no one talked about with them before, things like that. When you're talking with a loan officer and their emphasis is on, I offer the best interest rates and fees to your client, I can save them so much, I offer better rates than anyone else, you're going to run into this as the issue. Their selling point should be, hey, my pre-approval really means something, and I'm going to make it so much easier for a client. And maybe I have better rates and fees, right? I like to add that in as well, but my main thing is this is going to be a smooth process. So next is going to be, that I like to really talk about, is the closing disclosure. This is going to be a huge reason why your deals get delayed a week or 4 or something days. So the closing disclosure is a very important document, because a lot of the numbers are not allowed to adjust more than a certain threshold in different categories. And if they do, you either have to generate a new one, or I have to eat the cost as a loan officer. So probably, and I have to eat the cost. But what happens is when this closing disclosure goes out, I cannot generate loan docs and have them sign for 3 business days, including Saturday, until they've had a chance to open this closing disclosure. Most people will wait, and they'll get the clear to close 2 days before you're planning on closing, but that's when they'll send it out. So let's say today's Wednesday, we get the clear to close. We're planning on closing Friday, but I get the closing disclosure together and send it out Thursday morning. That means I have to wait Thursday, Friday, all of Saturday. Then Monday, I can generate the docs, which means they're signing Monday night and closing Tuesday. So that's why your deals are getting delayed. If they do it properly, most lenders will allow a closing disclosure to go out at the what we call the initial underwrite. So when the underwriter initially gets the file, reviews everything, and says yes, there are certain things we have to provide. One of them is a homeowner's insurance quote. One of them is, sorry, it always does this to me. Stay in this call. Homeowner's insurance quote. So I have a good idea on that. I have to provide a proof of property tax, or what the taxes are, and a few other different title and escrow information, which is huge. So those of you who have listings who are choosing title and escrow, I don't need them to be amazing title and escrow officers. I just need them to answer an email, and send me their information, to be completely honest. And I've had so many that will spend 3 or 4 days sending that, and it should take 20 minutes. Industry average is 20 minutes to send their fees, a list of their fees. And if it takes 3 days, that's why your deal is getting delayed. So we always like to do this day one. That also may be why we don't submit the loan immediately day one. We'll try to get it day two, because I need just a little bit more information, but it will save us a week at closing. Next is, a big one comes down to cash to close is 25%, which this is funny because AI kind of made this presentation, but it found this on the internet, that closing delays due to cash to close errors make up for 25% of all delays. What tends to happen is people are miscalculating closing costs, because, not to say they're not from an area. So if you're nervous to work with a loan officer that's not from the area, that's not the issue. The issue is how long, do they overestimate in their, or do they understand how much closing costs are? Do they overestimate or underestimate how much title and escrow fees are, county transfer taxes, or do they even spend some time looking it up? Like, if I was a listing agent and I saw, if this is important to you, a loan officer totally out of the area or from a different state, I'm going to say, hey, I just want to make sure that you verified county transfer taxes. And if I'm personally am aware of any special tax, that I bring it up to them, or transfer taxes. Like, we're in Placer County. Some areas have a Placer County land trust that has just a small additional fee in the transfer tax, but it makes up cash to close. So I'm going to bring that up to them. And that way I make sure that they look it up. You may also ask, if you really are interested, what typical price range do you work in? If you're, let's say you're working with, more of a higher end home. So I'd say probably like $900,000 purchase price or more. Title and escrow fees do start to adjust. Those transfer taxes do tend to be more, and so they need to be aware of that. Same thing for lesser valued homes. If it's below 200,000, and they're used to telling people, oh, closing costs are anywhere from 2 to 3% of the purchase price, depending on how the agents write the offer. That's what a lot of people will say. If the purchase price is below 200, that percentage goes up, because there's a lot of things that are just a flat fee. Underwriting fees are a flat fee. Title and escrow fees, flat fee. So if they're not aware of that, they may have misquoted the client. That's a big one, is, are they aware of closing costs? I think that's a simple question to ask. Is your client aware of closing costs? Do you mind sharing just a rough number of what it is? Because that's what they're going to have to verify in a bank statement. You would think, and this is a big thing, is in the initial call that a loan officer has, they'll ask, how much do you want to put down? They should not be asking that. They should be asking, how much do you want to spend total out of pocket? Because that's what people mean. So if I say, how much do you want to put down? Someone's going to say 50,000. They mean spend 50,000 total out of pocket. Now, you would think that if someone says 50,000 to me, that they have 50,000. Not every time they have that. So once again, just that's another big one to check up on. Lender turn times is huge. So I'm a mortgage broker. Brokers can get typically the best deals, interest rates, fees, whatever. We can save your clients a lot of money. However, we tend to not operate as efficiently. Why? Because we tend to shop ourselves. So we go from lender to lender to lender to lender, trying to get the best deal for the client. When we're going to different lenders we're saving nickels and dimes when we should be focused on turn times. So turn times are huge. I go with a lender because it's like a couple hour turn time to review a document. versus others are 3 days. Or, I mean, I've had some that claim 7 business days. I'm like, business days? Oh, Jesus. Okay. And that's not, oh, I give you something, today counts as day one, tomorrow counts as day one. So this would probably be the number one question is who's your lender and what's their average turn time with reviewing documents? Because it can make a huge deal, especially if you've got a listing with solar and there's a lease needing to be transferred, even if there's no lease, even if it's owned outright, a lot of companies want proof that it's owned outright. And so if I have a lender where I know I can challenge them and say, you don't need proof because title says there's no cloud on title and that there's no lien on the property, their senior staff will review it in a couple hours and say, yep, you're right, remove the condition. So turn times are huge. Now, along turn times, it's when do documents get submitted? So my team at Purpose Home Lending, some are sitting next to me, we submit things the day we get them. I've had so many times where when I first started our company, we use third-party processors, right? They're just like the transaction coordinator, but for collecting documents, that they will wait way too long. Now, when I get a list of conditions, so I get approved with conditions, I look for anything that's major that's going to be a deal breaker, and we try to satisfy that first. Now, everything else, I want the underwriter to look at it all at the same time, but not if it's taking multiple days. Yeah, so when I get a document from someone, I'm not trying to submit it right away, because the other thing, and I'd be very cautious of anyone who is really saying, hey, did you submit that document? Did you submit the document? The problem is if underwriters have to keep going into a file, one, that company is not going to have good turn times. But two, it gets really messy because the person has to go in and remind themselves about everything else that's going on. So if I can just submit everything at once, it makes their life easier, which, honey attracts more bees. They're going to be happier and they're going to clear it a lot faster. So we try to do that. We handle the major things up front so that I know we're good to go. I don't want to necessarily remove my loan contingency at that point, but I'm breathing a little easier because maybe some things came up that I was not expecting, and it's hard to expect, but we're going to move through it. The rest of it is interesting, which brings me to my next point is timely submissions. How fast or how long does it take? Let me see if I talk about this. Yeah. How fast do clients submit documents? This is where you as an agent can really help. I'm not saying, and I do not think agents should ever feel that they have to do the job of a loan officer. I know agents who want to try to pre-approve clients, and I think that's the worst mistake you can make. Sorry, I just want to make sure it's not ending in on me. Worst thing you can make is try to pre-approve someone. The reason why is you could easily say one thing that they then take as, oh, I'm disqualified, and they disappear on you. Just best thing to do, in my personal opinion, and this is what I teach all of our loan officers at our company is, and a lot of agents I've worked with, is just say, I've got a great loan officer. They're going to really help explain everything. They've got great fees, great interest rates, but they're going to really take care of you and be a representative for you. I'm going to put you both in a group text so that they can set up a time to talk with you. They usually don't pull your credit. They just want to have an initial call to see where things are at. They'll give you some quotes and options. From there, they'll talk to you about possibly pulling your credit. Most of the time, from my experience, they start with a soft pull, so there's no hit on your credit, because that's exactly what we do, because we pay for the credit pull out of the pocket. And I don't like, hurting someone's credit and throwing away money just to have to quote them something they're not interested in. So I'd much rather just say, hey, let's talk about your credit. Now that we both feel comfortable in this loan option and this product, let's start with a soft pull, since you were not very confident about your credit. Some people are very confident. They know that they have really great credit. Even if they're off by a little bit, I can look and see it's not going to make a difference. So whatever. But what we do need help with is, psychology wise, it helps and it really pays off when people hear the same thing from multiple people, especially the person that they get face-to-face communication with. So with us, we try to send videos explaining different things to our clients, so they get somewhat of a face-to-face interaction. They can come in the office, but to me, that's a huge waste of time for you. When you repeat a lot of things that we say and you do it face-to-face, it goes a long way. So best thing to say is, if we want to get the best deal in negotiating, we want to be on time with everything when it comes to the loan. So in order to do that, when a loan officer asks you for a document, just remember, it's not them asking for it. It's not even really the underwriter asking for it. It is the government agencies that create these guidelines that change constantly, and that's who's asking for it. And there's rules and there's reasons why. It's not just we're nitpicking everything. There are legal major, like I've had people throw a fit about having to provide all pages of a bank statement. Well, there's this thing called money laundering, and it is real estate's the biggest number one vehicle for money laundering, apparently. People threw a fit about having to provide a ton of work history related things. Well, there's a law called the lenders have to show an ability to repay the loan, because before we used to just say, you think you make 400,000? Great. You make 400,000 a year working at McDonald's. I'm going to approve your loan. Well, now everyone in the market gets affected and prices go down because you can't repay the loan. And now there's a shit ton of foreclosures everywhere. So I have to show ability to repay and verify it with physical documents. You texting me, yes, I make this much. No, not going to fly. It's not a credit card. This is not a credit card. This loan affects everyone. So that's why. But it would really help it does really help when real estate agents reiterate a lot of what we were telling our clients. Things like, hey, when the lender asks you for a document, just please submit it as fast as possible. Just know they're on your side. The underwriter's on your side. They're just following guidelines. So just to be clear. Now, there are lenders that have something called overlays. So basically, there are industry guidelines and they're adding extra guidelines. A lot of times that's more of your direct retail lender. So their company is the one that the client is making payments to, but they have in-house loan officers, in-house underwriters, in-house everything. And they're trying to mitigate their risk. And if they've had issues in the past, they're going to have to add overlays. Just so you know, we say no to any company, any wholesale broker that we take loans to, if they have that kind of stuff. But yes, that is a huge thing, is just client readiness on submitting documents. If it takes them multiple days, it can be an issue. We try to prepare them ahead of time before even getting into contract, so that there's an expectation set up front, but that is what it is. Now, a big one that this is, for you listing agents, when you're taking a listing that has an HOA, specifically a condominium or a condo that has an HOA, there's a solar company involved, whether lease, owned, or you're trying to transfer the loan, which is not recommended, but okay. I get it. Some solar salespeople totally trick your clients into thinking that it's really transferable, but it's really hard to sell that property. The solar, you can't really start that process until the buyer gets into contract. But if you're the one choosing title and escrow, you need to tell them and set the expectation. Day one of us getting in contract, you better freaking believe that if I'm going to choose you as title and escrow and I don't get any freaking kickback for choosing you, and I'm going to go argue with a bunch of buyer's agents as to why we're using my title and escrow company, you are ordering the condominium docs, transfer docs, HOA docs, and solar docs day one or day two of us getting into contract. That's all I ask. I don't need you working on the weekend. I don't need you working after 5. I just need you to do that stuff. And if the lender asks for your fees or is trying to work with you, please ask for it, or please provide that as quickly as possible. Not 3 days later, maybe the next day, fine, but first day, perfect. I will use you forever and be loyal if you could just do those things. That's what I'd be saying if I was in your shoes, because this is what tends to happen. We're a week in. Then they order the condo docs and they try to say they didn't, but we see the order date on our end. And then everyone's yelling at the loan officer and we're saying, I don't know what to tell you. The condominium has not given us the condo docs, or they're providing us the wrong contact information for who manages the condo. I literally drove my butt over to some property management company where I had 4 different people saying, I'm trying to find this property you're talking about, and I'm just not finding it. Finally, this lady came and said, hey, we don't manage that property. I have no idea who manages it. I almost used her accent. And I had to drive. I remember how I did it. I think I had to look up a previous sold property, call the listing agent. The listing agent said, oh, this is the real management company for that condominium. And there were issues. There were repairs needing to be made. That should have been that they should have known that when they listed it, because I had to then track down the contractor, get them to send an email stating that the repairs that were required by a California inspector did not affect that specific building and condominium. So this is the kind of stuff that can really delay it. Same thing with solar transfer. We'll hear, oh yeah, the loan's transferable, but it takes us 30 to 60 days. And it's like, you can call the loan officer and ask for updates all you want, but it's not my fault. It's not anyone else's fault. To be honest, I don't think it's necessarily your fault, but we should have verified that when we took the listing, that way expectations from day one were set that it could take 30 to 60 days to transfer this loan. Otherwise, maybe we should have built it into the list price, or I don't know, right? It's just, that's the kind of issues we run into. And there's always a lot of finger pointing. And I like to teach these classes because I think it's just natural for a lot of people to point fingers. And it gets frustrating, when you get close to closing and your title and escrow company say, I don't have loan docs. I really encourage a lot of you, whether you're watching this recording or you're in the class right now, just call bullshit. The reason why is when we get the clear to close, you can always call the lender and say, did we get the clear to close, and are you balancing with title and escrow? Balancing means if we work with our preferred lender, one of our main ones is United Wholesale Mortgage, number one lender, wholesale lender, actually number one lender in the nation, but volume wise. I can literally put in your title and escrow company's email and send them a link. They can go update fees on their own, and they can click generate documents. They do not have to do this back and forth thing. Instead, what every single title and escrow company, except for one time I actually had someone do it the easy way, what they do is they send me a closing disclosure form and say, here's what we have. I update, my team updates the fees on our end. We send the link back to them and say, I think we're balanced. Are we good? And they say, again, hours later, no, we also need to update this fee. Here's a new form. It's like, that would have been great for you to tell me the first time. But also, I'm getting calls from your listing agent saying, why don't they have loan docs? But you're constantly, hours later, readjusting another fee. And now we're going to push another day. I already know it. So we're going to have to readjust a lot of these fees because things get prorated, and you're driving me crazy. Instead, your title and escrow company could easily just access the link and go in there and update it. If it's the number one lender in the nation and they say they work with them all the time, then they could take the time to learn how to do that themselves. It would make their life easier. It's easier than sending me the closing disclosure in that document. So just wanted to throw that out there. I don't think it should be a requirement of you for them to have to access that link. But once again, with RESPA, you don't really owe anything to them. I know you like them and maybe they're great people and they'll help you out, but they're not giving you kickbacks. So why are we letting them be lazy? Just my opinion, but it is what it is. They're great and they do a lot. So don't get me wrong. Last real thing I wanted to talk about was clear to close average. So of course, got to talk about us. Our team is really good at collecting documents, submitting everything very quickly. Personally, I like to tell people this, okay? The industry average clear to close, which means all conditions are cleared, you can start working on documents and funding. Our industry average is 43 days, which I did not know. That is ridiculous. Ours is 14 days. I think a lot of times it can be less, but people don't want to close as fast, so 14 days is our average. I don't think we do anything magical. I am not going to stand up here and say we are the absolute best at what we do, because that's some bullshit when people say that. Like, how do you know? How do I know I'm the best at what I do? I think I am good at setting expectations, and I'm good at communicating, and I care. So I care that people want to close quickly. And so if I get documents, I'm not going to say, oh, I got to work on something else. It's too easy to click download and click upload, right? I mean, that's literally what I'm doing. It's nothing crazy. But my method of communication, I think, is just or our method at our company of communication is just a little different. What a lot of people do is we get a list of conditions and items that we need, but it's in underwriter language and guideline language, but they copy and paste that and they send it to the client with a link to upload documents in a safe, secure portal. Sometimes, not all lenders do that, which they should or need to. But what they do is then the client's calling them, or the client's just confused and they're not even replying. What we do is we go through the list and I try to clarify things that I don't even understand. I call the underwriter and there will be something that makes zero sense to me. Like, I don't even know what you're asking for. And they go, oh, I'm pretty sure the borrower took time off, but it's really not reflected in the pay stub. I just need an email from their employer saying when they took time off and whether it was paid or not paid, because I'm pretty sure that's what it is. I've seen this before, but the guideline reads differently. So I just say, great, borrower, here's all of our conditions. I need this document, but I need you to get it to me in this way. This document, you just click download, put in this portal. This one, I need your employer's email. I'm going to send an email including both of you on it. This is what I'm going to ask them. This is essentially how I need them to reply. Just keep it simple. But I will text you as soon as I send it so that you can call them and ask them to reply as quickly as possible. This. So I make a list and I record a video of my list, and this is what our whole team does. And I send it to them, and it makes it so much easier because I can replay the video, right? I can call and go over this, but it's easy for people to forget, a list of even 5 things they have to do, right? And I set the expectation on time. That has been the magical thing we do to get a clear to close in 14 days. The only other magical thing comes with appraisals. We try to order the appraisal. It's usually day 2 or 3 because we have to get the initial loan estimate out, which I need title and escrow fees to do that. They review it, sign it. I don't need title and escrow fees, but then I have to overestimate, and I might have the buyer get cold feet because they're seeing a really high number that isn't accurate. But if I don't quote a high number, then I have to eat the cost if I'm off by a little bit, and I don't like doing that. Like, who likes giving up their commission? So there's that. They sign it. I can then order the appraisal. When I go through most of our loans go through UWM, unless if they're a weird situation. Appraisal Direct is their appraisal platform. It's an appraisal management company that doesn't really take a fee from the appraisers. So the way it works is I submit a request to an appraisal management company. They send it to a bunch of appraisers. But if I say, hey, they say, hey, our fee's $700, they're now advertising to the appraisers $500 or $400. And if no one claims it, $450. No one claims it, $500. But now you're adding days of the appraisal not even started. Whereas the money goes directly to the appraisers, all of it, day 1. And it's the full amount. And our average appraisals are completed in 7 days, not even like 7 days from when we get into contract. I think, probably an average would be 10 days, but I think 7. 10, I don't know why, but because people can't access it all the time, but very quickly. That's the only other magical thing that we might do. But this is why, it's just important to be careful of who you work with. But this is why deals can get easily delayed. It's just turn times. It's choosing the wrong lender. It's not setting expectations up front. It's not communicating things with the client. So when you get the loan officer who says, oh, there were just some other things we had to button up. What things, right? I don't think you have to see a conditional approval letter, but what things? Oh, well, their income was off, or a big one is their boss pays them in a weird way, in the way they reflect it. So this is classic of any hospital worker. The way they break up their pay stub is so freaking confusing, because if people get extra degrees or they take extra classes or certifications, they get paid extra, but they itemize it weird. And it's not straightforward. And so we have to send their HR department a form to fill out. Some hospitals, they're used to only getting requests for apartments and rentals. And that's different. They just click a button and it verifies their income. I need someone to actually fill this out, and that can take some time. And sometimes it's hard to expect that. And that can get outdated. So if I do that day one of me even just talking to the client, if it takes 3 weeks to find a house, that might get that statement. I may have to redo it. And if it took a while to figure out who that person is, that I get that form filled out, which that happens a lot too, that is why things can get delayed. So hopefully this is helpful for everyone. I do appreciate you listening. I try not to be too long-winded. But I'd love to talk with anyone. What we try to do with our company is we want to be a resource. We don't want you to feel like we're just expecting you to send us clients and we just do the basics of our job. Like, I like to teach this class not to say, oh, this is how we're different and we can close super fast. I want to close things fast. Damn it, I want to get paid. And you do too. That's not where I think our value is. I think that should be the basics of my job. Where I think we can add a lot of value is really finding a way to step into how you conduct your business so that we can find a way to be an asset to you. So if you're doing something and it's working for you, or if you need to figure out what works for you, let us come in and figure out how we can duplicate your efforts. And I'm not saying we're going to go hold your hand and sit at an open house every single weekend, but maybe we're going to help with strategy with open houses. We can create better flyers, better calls to action, help you with marketing, whatever it might be. Like, we want to be that resource to duplicate your efforts and basically kind of be your assistant, right? I mean, we're both in it, in the sales industry, and we're here to help. Once again, I appreciate you listening to this long-winded presentation. I hope it was helpful. If you want to hear any other details, please feel free to reach out. I'd love to perfect this presentation as well. And I look forward to working with you hopefully in the future.